Private property rights, the ability to own land, something that many of us see as an amazing benefit of living in America. This video is intended to give context around the backdrop, the financial mechanics to acquiring land, financing it, things to keep in mind when you're purchasing land, and also the difference between, let's say raw land and infill lots. We're going to cover all of that and mostly focus around the financing components of each, so you can put yourself in the best position possible and know what options are out there as you pursue your dreams of land ownership. This is JP with Blueprint for Prosperity. Let's get right into it. So the first thing we're going to do is distinguish the difference between raw land and what's considered infill lots in most cases. Raw land can typically be what it sounds like. It's usually going to be more to the outskirts of any major city or town, and it's usually going to be undeveloped land or unimproved land. Sometimes it can be still developed on land, but in most cases, raw land is going to be exactly what it sounds like. This is going to be oftentimes the more complex to get your hands on from a financing perspective if you're looking to do this through traditional banks and lenders. They are a little skittish about financing this type of land because if push comes to shove and they have to recoup that land due to default, it could be a little challenging to offload it for some type of profit. They don't want to deal with that headache. So it's not as easy. When it comes to raw land, what you'll find is that owner financing is very prominent in that space. You do still find some banks and institutions who will lend on it, but in many cases, they want you to have significant down payment, usually somewhere in the 40 to 50% range, just to give them the proper cushion that they feel like they need to minimize their risk. But nonetheless, raw land can be an amazing experience to own. It comes with its challenges. You have to keep in mind stuff like zoning, permitting, all of these different things, getting the land surveyed if you're going to build on it, so on and so forth. It gets a little complex, but the benefits are amazing. Most times zoning is really lax because it's not in a major metropolitan area. So if you're looking to do, let's say campgrounds or glamping, trailer park, recreational uses, whatever the case may be, you may have a ton of flexibility on raw land that's a little further out away from major metropolitan areas. But the financing component, again, is a bit restrictive on average. You want to consider, again, owner financing options. You can continue to look at financial institutions that may offer, lending on these different types of property. And again, just be prepared if you do run across them. In many cases, they're going to want you to put substantial down payments on them to keep themselves in a safe zone on the financing in case of default. On the flip side, when we start talking about lot loans, what's also known oftentimes as infill lots, suburban areas, residential areas, usually for residential development specifically. There's obviously commercial aspects to this, but we're going to lean more in on the residential side in this video. We're thinking about, building a new home or spec building in some cases, which is basically when you are, developing a residential area and building out new properties that you intend to sell out to an end buyer. Things of this nature, or build to rent is becoming pretty popular in today's world as well. And buying lots and building homes that you intend to rent or sell to an end user who then will rent the property out to investors, selling it to investors who are going to rent the property out. In that scenario, those loans are a little bit more common to come across on a conventional banking and credit union basis. Okay, so you're looking at a scenario now where it's pretty common for regional, small banks and credit unions to offer lot loans in that scenario. And the reason that they're a little bit more comfortable and lax from a financing point of view in comparison to raw land is because this is usually in suburban areas, metropolitan areas, or the periphery of a metro area that can more realistically be resold for some reasonable value if there's a default situation going on. It's easier to get access to maintain it, so on and so forth. There's a bigger buyer pool if you need to resell this property. So banks and credit unions are a bit more comfortable with them when it comes to offering financing. So it's not like raw land where you're going to have to look into these more creative financing options to get your hands on it. You're looking more in a convention, having options in the conventional range. So again, What you want to do now is focus on what your end use for this land is. So we're going to start thinking about buying building a primary residence. Are we going to do, spec building? Are you looking to build a home that you're going to look to sell to an end user, whether it's a cash sale or you're going to own or finance it if the zoning permits? Because again, you're going to go back to having to need zoning, surveying, things that is permitting, things of that nature. But you have a few more options if the zoning allows it. So building for yourself, building to sell, building to rent, all options that could be on the table. Just do your homework before you jump into a loan or make a purchase. So that's the distinguishing factors, generally speaking, around raw land and infill lots. Again, when it comes to raw land, you're looking at many different creative financing options. I spoke on owner financing. You also can take out personal loans. You can take equity out of your property. The list goes on. Anywhere you can get your hands on cash, you can jump into the raw land space. You can do the same thing with infill lots, but you usually have pretty reasonable conventional financing options, which we're going to talk about a little bit more right now. So when it comes to those infill lots, in many cases, again, you'll have access to this with conventional banks and credit unions. They're going to offer terms typically somewhere between 5 and 15 years. They're going to offer LTV, loan to value, of about 70 to some cases 100% financing, meaning that they're going to request anywhere from 30% or absolutely nothing down, depending on the institution and depending on your financials. But it does exist, which these are diamonds in the rough. Because if you think about your end game on buying this property, you oftentimes, even if it's a primary residence, a spec build, a build to rent, you don't have to put any cash down to acquire that property. You can lean almost exclusively on your personal credit, for instance, let's say. Then this will allow you to focus your cash around either the building of the property, something of that nature. And in some cases, if you buy that lot and it has equity after you purchase it, and you didn't have to put any money down, and you really could win, because many times when you're building new homes, you may have a loan program that allows you to build that property and use the equity in the land as the down payment on that property. So if you can get that whole thing in motion and put together, you can come out really successful building for yourself or building on a spec build type of situation. It's a little nuanced. It's not the norm, but it exists, and I wanted to put that out there. So you want to have your end game in mind, especially with infill lots. Raw land is a different scenario, especially depending on the financing. If you're prepared to pay for it, you can potentially pay for it and not fully have your idea mapped out, because that land's not really in a city most of the time. So the fact of it needing maintenance, upkeep, expensive taxes, and things of that nature, possible HOA fees and all of that, on undeveloped or raw land, not as common. So if it's sitting, vacant and unused, and it's not been cut down or managed or manicured, whatever the case may be, a lot more common that's going to be okay based on zoning, based on your neighbors. Infill lots require attention, so you have to go in with your head on straight. So you, again, 5, 10, or 15-year terms, anywhere from 30% down to absolutely none with some institutions, and then small to regional local banks and credit unions are going to be your best options and most common options. Commercial banks, mid-size and commercial banks don't dabble much in the land space at all. They really don't. Very uncommon to find a really decent size, mid-level bank that you might find in 10, 20 different states that's going to give off lot loans. And especially, larger banks in 30 plus states, not likely going to find land loans, highly unlikely. So the next thing is credit requirements. Credit requirements are going to be, on average, you're going to want to be somewhere in the 700 plus range. When it comes to the type of loan this is in a credit space, it's a bit of a hybrid between a real estate loan and a personal loan most of the time. Now, if you're literally buying, financing a lot loan to build a primary residence, then there's different loan programs where that's all going to be considered a mortgage or real estate loan. But if you're buying it like just the lot, with the focus as it being the lot, not explicitly looking to build immediately on that property, then that is going to fall a little bit more in the personal loan category, or at least a hybrid of a real estate and a personal loan. They're going to pull from one bureau instead of three, like a tri-merge on a mortgage, for instance, right? So you're going to get one bureau pulled. Usually you're going to need to have, like I said, 680, 700 is around the ground floor. You're in a good spot at about 720 to 740. And then you're going to want to be prepared for whatever down payments, again, which fluctuate from 0 down to 30% on average for most institutions. So what you want to do is do your homework in advance, contact the lenders that are offering the loans closest to your interests, and find out their credit requirements, who they're pulling from, the longer terms they have, any perks or benefits, any closing costs. You want to do your homework on that in advance. I have not plugged institutions into this video or brought up any names because it's, as I said, very localized. So in that situation, I would be covering hundreds, possibly even thousands of institutions that might qualify based on your specific area. What I'm doing in this video is giving you a structure or framework on what this looks like overall if you're getting interested in financing either raw land or lots. I want to give you an overall view so you can have a foundation and then jump into what your options may be from that point in time. So just a quick recap: raw land, infill lots or suburban lots, residential lots, two different beasts. Raw land, again, leaning in the creative finance space, lower maintenance depending on the zoning and the neighbors, and lower taxes. Freer zoning circumstances where you'll be able to do more with that land is extremely common. Infill lots, very much available in conventional banks and credit unions. Gonna have stricter zoning circumstances and require more upkeep on a more consistent basis because you're most likely in a suburban area or some residential area. And you're also going to want to likely go in with your end game loaded and ready to go, whether you're looking to build on it or find some kind of recreational use if allowed. You want to find out what you're going to get that land for. And the same thing is going to apply on the raw land, but it's a little bit more flexible. Your raw land is going to be able to sit out in most cases, and you'll be able to formulate your ideas or take your time developing your ideas. The raw land is going to be really ideal for creative financing, like owner financing or seller financing, taking out equity on existing property you own and using that capital. If you have taking out a personal loan, the only difference with the personal loan, they tend to have very short time frames, meaning that your personal loans are 3-5 year terms. Very rare to see a personal loan go out beyond 5 years. They have them. You might find one with a 10-year option. Very uncommon. And in that scenario, that means your payment could be thicker than it would be on these lot loans where you have conventional banks that might go 10 or 15 years out on that same loan amount. But again, not as common for conventional loans or credit unions to finance raw land that is more on the outskirts, not as common. So you want to have your ducks in a row either way. You're going to need access to capital in many cases, anywhere from really 0 to 30% on the infill lots. And then the raw land, you're looking at whatever the financing option you decide to go with. But if you do find a conventional lender or credit union that will go out on some raw land in your area that you're interested in, they're going to likely want 30 to 50% down. Be prepared for that. So I just wanted to bring this to you guys because I think owning land is a phenomenal experience and an opportunity for many of us here in America. And having your finances in order and understanding how to approach that is very important because, again, as you can see, it gets nuanced. To be completely honest with you, this video is running kind of long, and I really ran through the options on both of these, different land types on financing options. I really did not go in depth like I could, and I'm most likely going to shoot a video that does extrapolate further, upload some graphics so you guys can kind of follow better. But I wanted to kind of just get this out in a quicker form so you guys can get a general foundation of what this looks like and where to start. Drop your comments down below on what you would like more details on as you come across this video, so I can go more in depth if I haven't already uploaded a video that extrapolates more on either one of these options. I'm probably going to break out into them individually because there's so many different details inside of each when it comes to, residential lots and raw and developed land. But I wanted to bring this to you guys because it's a tremendous opportunity, whether it's for investment or profit opportunities, business opportunities, legacy, or recreational. Owning land is a beautiful thing. And I think all of us should partake in that at some point in time in our journey. So I wanted to take the time out to say I appreciate you guys for tuning in. As always, I enjoy bringing you this content. I know it was valuable for you. It's a late night for me here, so excuse me if I got a lag. But again, I always enjoy bringing this content to you, and I'm grateful that you guys tuned in. This is JP checking out to all my pioneers out there. As always, I want you to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.